$1 trillion is shifting hands faster than ever, and the forces behind it are more surprising than you think. Stay with me until number 1, where the biggest driver is something almost nobody guesses. Globalization has quietly reshaped the flow of wealth across continents, turning distant markets into interconnected profit pipelines. As companies relocate production and tap cheaper labor, capital follows, creating new hubs of affluence while draining others. The rise of offshore manufacturing, coupled with advanced logistics, means that billions now travel through ports and digital corridors before reaching investors' hands. This redistribution is subtle yet profound, laying the groundwork for larger shifts we'll explore next. Coming up, we'll examine how corporate giants are consolidating fortunes on a massive scale.
Corporate consolidation is turning once separate empires into colossal wealth engines, as mega mergers funnel assets and earnings into fewer hands. Over the past decade, record-breaking deals have combined industry leaders, amplifying market power and creating cash-rich conglomerates. This concentration not only reshapes competition but also accelerates the transfer of equity value to shareholders and top executives. As antitrust scrutiny tightens, the pace may fluctuate, yet the sheer scale of these unions continues to push trillions across balance sheets. Next, the rise of decentralized finance promises to upend traditional channels.
Decentralized finance, or DeFi, is carving new pathways for wealth to move beyond banks and brokers, leveraging blockchain technology to democratize access to financial services. Smart contracts automate lending, staking, and yield farming, allowing participants worldwide to earn returns previously reserved for institutional players. Although volatility remains, the total value locked in DeFi protocols has surged into the hundreds of billions, signaling a shift in how capital circulates. This digital frontier also draws traditional investors seeking higher yields, further amplifying the flow of money into crypto ecosystems. After that, shifting consumer habits will redirect trillions.
Shifting consumer preferences toward experiences over possessions are redefining asset values, as millennials and Gen Z allocate disposable income to travel, dining, and digital services. This trend depresses demand for traditional luxury goods while inflating sectors like hospitality, streaming, and immersive entertainment. Companies that adapt reap higher margins, funneling profits to shareholders and reshaping investment priorities. Meanwhile, the resale market for physical items fuels a secondary flow of capital, further altering wealth pathways. Soon we'll explore how private equity is funneling capital into new arenas.
Private equity firms are now the silent architects of modern wealth redistribution, acquiring companies, restructuring operations, and exiting with substantial returns. By deploying billions into buyouts, distressed assets, and niche markets, they generate cash flows that enrich limited partners and senior executives. Alternative investments, ranging from hedge funds to real asset platforms, provide high-yield opportunities, attracting institutional capital that might otherwise sit idle. This concentration of financial muscle accelerates the movement of wealth toward a select group of investors, while also spurring innovation in the companies they back. Up next, emerging markets are witnessing a surge of newfound riches.
Emerging market elites are amassing fortunes at a pace that rivals traditional powerhouses, driven by rapid urbanization, tech adoption, and expanding consumer bases. Nations across Asia, Africa, and Latin America see a growing class of billionaires whose wealth stems from fintech, e-commerce, and natural resources. As these economies integrate with global finance, capital flows outward, investing in foreign assets and diversifying portfolios. This cross-border movement not only boosts local economies but also injects trillions into the worldwide wealth pool, reshaping the geographic balance of riches. Now, policy and tax reforms are reshaping the rules of the game.
Policy shifts, especially tax reforms, are rewriting the script of wealth accumulation by altering incentives for savings, investments, and corporate behavior. Recent changes in capital gains rates, estate tax thresholds, and international tax agreements have either accelerated capital flight or encouraged repatriation, depending on the jurisdiction. Governments also employ stimulus measures and subsidies that channel public funds into private ventures, further moving money across sectors. These regulatory levers, while intended to spur growth, inadvertently direct vast sums toward particular industries and demographic groups, influencing the overall distribution of wealth. Then, climate change is forcing a massive revaluation of assets worldwide.
Climate change is silently prompting a massive revaluation of real estate, infrastructure, and natural resource assets as investors anticipate future risks and opportunities. Coastal properties face devaluation due to rising sea levels, while renewable energy projects attract premium financing. Insurance premiums climb, influencing corporate balance sheets and prompting shifts toward greener portfolios. These adjustments cause capital to migrate from vulnerable sectors to those aligned with sustainability goals, moving trillions in the process. Then, technological disruption is accelerating digital asset growth.
Technological disruption is fueling a digital asset explosion that's reshaping wealth in ways previously imagined only in science fiction. Advances in AI, cloud computing, and the Internet of Things have birthed new business models, software as a service, platform economies, and tokenized assets that generate high-margin revenue streams. Venture capital pours record amounts into startups, while established firms monetize data and patents, shifting capital from traditional industries to tech-centric ventures. This migration not only inflates valuations of digital companies, but also creates novel wealth channels for founders, early employees, and investors worldwide. Finally, demographic aging will unleash the biggest wave of inheritance ever seen.
Demographic aging is set to trigger an unprecedented inheritance wave, moving trillions across generations as baby boomers transition wealth to their heirs. In many countries, estates are projected to exceed $30 trillion over the next 2 decades, reshaping asset ownership from businesses to individuals. This transfer fuels new investment patterns, charitable giving, and consumer spending, while also prompting tax policy debates. The sheer scale of this intergenerational handoff dwarfs previous wealth shifts, making it the most significant driver of capital movement in the 21st century. Understanding this looming redistribution is crucial for anyone watching the global financial horizon.
We've unraveled 10 powerful currents that are reshaping who holds wealth in the 21st century, from global trade ripples to the looming inheritance tsunami. Understanding these trends gives you a clearer picture of the financial landscape ahead. If you enjoyed this deep dive, subscribe so you don't miss the next mind-blowing list we release each week. Which driver do you think will have the strongest impact on future generations? Share your thoughts below, and if this video added value, give it a like. Thanks for watching.